Good afternoon, ladies and gentlemen. A very warm welcome to you on Market Masters, our special show where you get to meet the finest brains on Dalal Street. It's our pleasure to welcome Mr. Sandeep Tandon, founder and chief investment officer at Quant Mutual Fund, one of the finest brains on Dalal Street, a person who has navigated bull and bear markets with equal and infinite ease over the last three and a half decades and made tons of money, created enough wealth for his long-term unit holders. Namaste, Mr. Tandon. A very warm welcome to you, sir.
Yeah, namaskar.
How do you see sentiment on Dalal Street at this point of time? As a broader market, we've seen record highs on the Fin Nifty as well as the Bank Nifty. How do you see the overall situation of the market as of now?
Okay, if I have to say that as compared to what was the situation when the post-Trump tariff-related narrative of noise started, if you're talking about right from April, second week or 9th April or so, if I'm remembering the date, sentiment has improved a lot. And then we have seen also Indo-Pak tension also. So a lot of people who were holding their position, they also got capitulated. So if you really ask me, market positions purely from the positioning point of view, market is very light. Leverage positions of the most of the large players is also on the lower side. Okay. FII participation has started coming back, which was not the case for last many quarters or maybe you can say for last 3 years also. So those background is pretty constructive. The only challenge is that valuations are still not that attractive that you can say, that I'm all in all the stocks. Okay. So hence you have to be very stock specific. I will not say in sector specific. I think it's a way we look at. You have to identify stocks and then one can participate, but you have to keep your biases positive. India is buy on dips. So I'm very constructive on the market with this background.
Okay. With this background in mind, Mr. Tandon, let's move into the world of deploying money. You run about 28 funds in which about 1 lakh crores invested. Uh, Everybody knows you are the best timer of the market. Now tell us, how are you viewing PSU stocks? The reason why I ask is that defense has had a very sharp rally. Many PSU stocks have appreciated dramatically from what were their lows in early April, mid-March. How is this segment looking to you from the point of view of an opportunistic fund manager looking for decent gains in the short term and modest gains in the longer term?
So let's understand the characteristic of PSUs. First of all, PSUs, the deep value stock, but high beta, but extraordinary liquid names. Okay, so that's the way I will look. So anything if you are in a risk on environment, PSUs will outperform. So if you recollect when July 2024, when we turned cautious on the market and says a risk off phase, we actually pruned down our exposure in June 2024. But in this year, in March 2025, we said it's a risk on period. In January itself, we said it's a mild risk on. Since then, we have actually increased our exposure in the PSU. Maybe could have increased 5 to 6% exposure in most of the schemes. So we are relatively anyway, if I have to say, overweight on the PSUs, and in the risk on environment, it will play out quite well. The challenge which you have to understand is that if whatever reason market corrects, let's say recently was the Indo-Pak tension or any other things, these are high beta names. So the corrections are generally steep in these names. But the good news is that you can get entry and exit very easily because it's a very liquid name. So we are very constructive. And if I have to look at from a long-term opportunity, let's say an equity market is not about 6 months of 12 months perspective, at least 5-10 years perspective, investor comes to the market. So if I talk about even, let's say, next 3 to 5 year perspective, I think it's a very constructive background for PSU. We have to understand that value as a thesis should do very well. Okay. So, which is a very important thing I have been saying from the beginning, 2020, I think this decade belongs to the value as a thesis right from September 2021. So PSUs are part of these value thesis. And we have to look at some of the very unique companies today. If we look at the PSU defense name has moved up sharply. It's not like it was unknown, but only thing when event happened, then people reacted immediately. So I think I will like to remain PSU as a part of my core portfolio. Maybe stock and sector can change from time to time, but we remain constructive and we like to remain overweight stand on the PSU as a theme.
Okay. Because you mentioned on your own that Quant has increased its uh, weightage on PSU stocks, I was going through your portfolios. OMCs find special mention, and they also come against the backdrop of crude oil prices being at 4-year lows. Mr. Tandon, how do you see this macro benefit for OMCs, coupled with the fact that they are dramatically cheaper what they were about 18 months ago, and there is no question mark on the balance sheet? How do you see OMCs at this point of time?
See, I think first of all, let's not link OMC with just with the crude prices movement. It's more of a sentiments, nothing beyond that. Okay, that's the way we look at. And B, they are very attractive. So we have OMC also in our portfolio. We have a pure oil company like ONGC and Oil India also in our portfolio. So we are, as a theme, we are very bullish on the energy as a theme. So we more than 20% is will be the energy exposure. I mean, it could be even significantly higher if I add the new energy also. So we have to look at, are we talking about a decadal opportunity coming in the energy space? So then energy power, the way we want to look at, we are very constructive. So OMCs, and specifically you talked about OMC, they're very, very attractive. Okay, entry exits are very easy, and trading at significantly low multiple. And for whatever reason, these are the stocks which has moved into some sort of neglected territory in last few months. So it makes sense to increase our exposure, and that's what we have done.
Okay. What else within the market is trading at a neglected corner according to Quant's? Uh,
See, if you ask me, the entire market has corrected sharply, but not necessary in terms of desired valuation, which every investor will be keen to participate. But I always say absolute numbers are important, but relative is more important. So the way I look at from a same FIs who exited India and they have come back in a big way. So what is the reason for that? Let's understand from a global perspective. As compared to global market with the tariff background, like in last fact sheet we wrote that it is bad for China and US because they are fighting among themselves, and it's not as bad as for emerging market, but it's good for India. Now, that why I said that on a relative basis, suddenly global investors has realized that India is like a safe zone sort of thing where markets are liquid, entrepreneurship drive is very high, and economy is doing extremely well. Political stability is extraordinary. So that background, they come back. So it's not like somebody will ask this question. Same people were seller earlier. Maybe they find more attractive valuation towards US market or the Chinese market in between. Now they realize that on a relative basis, US has become more expensive. Withdrawal has started. Cross-border flows has been slowing down. So with that background, India is more constructive. And if you really look at beginning January 2025, best of the strategies talked about beginning 2025, it's all about DXY, it's all about US market, emerging market is in doldrums. India specifically is very expensive. And now look at 6 months later, what happened? Dollar peaked out, US market peaked out, emerging market has recovered, and so is the case in this rally. India is also leading. So I think the background, the way I look at it, I will look for a opportunistic role. Like India, if I had to say, it's a buy on dip strategy. And that's a thesis which I would like to play. And in between that buy on dip strategy has become sell on rise. So with that background, I think the overall macro perspectives in our favor on absolute basis, yes, on relative basis, we are in an extraordinary advantage. So I think if you start factoring the relative aspect to the China relative to US market and relative to the what is happening in the global market, I think we are in a safer zone, and hence you will see money. I always say, beginning 2025, we said that decoupling process in the US which should start middle of the year, which has already started. Like last month, we wrote that India decoupling process begin, which means even 10-12% money if you shift from US to Asia-centric emerging market and including India, there will be sizable momentum out here because India cannot absorb this sort of liquidity the way developed market can do. It's a very constructive background for the market. So I think I would like to look for a buying opportunity rather than just worrying too much about what is happening in the global markets.
Okay. Let me just take this argument a little forward. This rampant tariff war and flip flop from Mr. Trump on a regular basis, plus the fact that you have these negotiations going on, at least with the US, does it, as a fund manager, make your life literally very difficult? One day you choose stocks based on one part of his thought process, if at all, and then again you reconstruct the entire portfolio or your own thought process, given that Mr. Trump has changed his mind. Apple's tariffs are perhaps the best example.
So, as a student of behavior finance, let me highlight we have to understand we don't have to get into the narrative and the noise that Mr. Trump creates. It is his style, Now, if a lot of people think he's absolutely a stupid person, he can take any stand. First of all, I always say, people try to understand that make your volatility as your best friend. This invisible animal should be your best friend. If you able to cope up this volatility, then you will survive. Not only survive, you can thrive this market actually. Now let's come back to the Trump. Irrespective of noise which he makes, I always say that everybody has certain style. So his style is like management by chaos. He will destabilize you, he will stabilize you again and again destabilize you. So that's the way he create a chaos, but ultimately he's a thinker, he has a strategy behind. Now if you really look at whatever noise he has created very smartly, he has already managed 10% tariff hike across the globe. Okay, and nobody have guts to talk about any reciprocal tariff, against this 10% which has come up. China, whatever the noise might be, still is 35%. So is the case with Mexico, Canada, 35%. Certain auto components or metal is again 25%. Now, if you really look at, people are really feeling very relieved now. He has extended to 90 days, things are settling down. But ultimately, he has achieved his goal partially. We have to understand that 145%, which he announced, logically it means you can't do any business. So these are all posturing game which happens. What you have to understand and read between the lines is that what is real action, what comes in reality. I think for that, let's wait till 10th July where the deadline gets end. And I'm confident by then a lot of things will stabilize. You think Mr. Trump doesn't understand that he will lose his allies if he fight this battle? But this battle is not about tariff. This battle is about supremacy of US and China. Okay, I think that is the aspect you have to keep back of your mind. Every other is a noise, whatever you are seeing is a byproduct of that. But the challenge is the two giants are fighting, and then we have to see how best we can capitalize that opportunity. And so far India has done a reasonably good job to optimize this opportunity which is visible. So I will look for a great opportunity for India in this turbulence or global uncertainty.
Okay. Mr. Tandon, I'm very keen to explore a line that you just mentioned in the passing, volatility, and how to make it your friend in this kind of a situation which is dominated by Mr. Trump's actions. For your own portfolio, which is about 96,000 crore rupees, how are you taking advantage of this volatility?
So, in very simple terms, in a very layman manner, if I have to say, if broadly you are clear that India is buy on dips, and if you are also equally clear that worst is behind that in the Feb end or beginning March, market has bottomed out, has started rallying, and we were the first to actually given a call on 1st March itself, saying that trading bottom around the corner, and we also talked about risk on environment. So, if we are broadly clear that from a medium term perspective, cycles are in your favor, longer term perspective, anyway, we are in a very comfortable situation, then any steep correction in the market, we tend to capitalize in terms of increasing our exposure. And similarly, whenever we see complacency happening, any stock is up 10, 8%, 10%, 15 days, it moves in few days or a week's time. Those are the areas where we can prune down our exposure with a clear intention to rebuild again at lower level. That's the best way to do volatility. I'm not talking about that you go and buy the protections in a big way, because we are not that bearish. So it's no point looking for hedging opportunity up to that extent. Maybe a small 5, 10, 20% of the portfolio, one can still do it if you want, if you feel it is slightly euphoric and you believe in the correction. Let's say today, last few days, we also felt that market has rallied too sharp too quickly. So it can correct and consolidate from the current level. Are we talking about any massive correction? Getting sucked at the peak of the cycle, then it will be a very big problem. Psychologically, you will be out of the market, because both the sides, if you are wrong, then it becomes challenging for you. And this is the case right now with large HNI investor, which we know, family office investor, we know, they are extraordinary bullish and suddenly they are extraordinary cautious and market has rallied. And majority of the people are feeling or getting a left out feeling. And that is something we try to, from a behavior perspective, we can read it through numbers, and when we can feel it also, what is happening in your surroundings.
Because you're a student of and a very well practiced student of behavioral finance, Mr. Tandon, what are the 3 or 4 things that you look at the bottom of this cycle to get into maybe sectors and stocks that require your attention at that point of time? What are the 3 or 4 parameters that are top on your list?
So I think every time the parameter can change. Let's say beginning 2025, I said this year you have to focus on global yields, not only about India yields. So we talk about yields, currency, and maybe vol indices, so volatility indices. If you can capture these three things, you don't have to look at the equity indices. These three indices itself will give you a fair bit perspective at what level you have to increase your exposure and what level you have to decrease. And that's the, and so far that thesis has played out quite well. See, what is very important to understand is what has changed. Okay, let's say today everybody is looking for a interest rate to fall now, next Fed meeting, and people are seeing a disappointment. And right from 2020 we are saying that global yields are in the structure bull run. Okay, so even you will see correction, those will be more of a cyclical move. Structurally, both inflation and yields will go up, and has potential. Even for next 5 years perspective, we remain very constructive. So anything which give you a very sharp up move, I think those are the areas where you can look for a buying opportunity, because the structure is up. But if you come back and now try to look at, because a lot of people try to compare the yield differential between India 10 years and US 10 years, and then try to look at certain correlation. I think all those correlations have stopped working long back. So let's not even waste our time in trying to look at, because we are saying that something has changed for India, and we are also saying that decoupling process with India has already begun. So if we are talking about a decoupling process, we are talking about the relevance or developed market is going to get diluted going forward, and hence we should not look into these things and get too much paranoid. If I say, let's say US yields are going to rise, now a lot of people can say, if this is the case, then we should exit from the equity market. No, because it will rise for the developed market, not up to that extent in the emerging market. In fact, if you look at in last few months, emerging market currencies have actually bottomed out. They are strengthening, where dollar index is actually correcting and consolidate, rather I will say struggling. Okay, can we say worst is over for the dollar perspective? Maybe no, because perceived risk is still high. But what you have to look at, the background is so constructive, and hence the moment you start tracking these global data and then try to take call on these global benchmark, then it will be very challenging for you to make any alpha in India.
Okay, let me just take one more question on global macro. Japanese 30-year bond yields are at a record high of about 3.2, 3.24%. Is there, at the back of your mind, a risk of yen trade unwinding in India?
See, the way I look at is that it is it's not like yields are spiking. Yield spike in two scenarios: either business is doing extremely well and demand is so high, or yields also spike when there is a crisis. Okay, so I think globally yields, as I said, global yields are anywhere in structured bull run. Okay, once you are very clear that this is a structured bull run and something has changed in the developed markets, then obviously it means something is not right in these market purely from a leverage perspective. Like Japan, I say Japan could be the biggest value trap from a longer term perspective, but I will not read immediately into it because carry trade unwinding has already begun, and people are looking for alternative currency for carry. And so this phenomena, which was the trend, I said these are the correlation which has stopped working now, but still relevant from a near-term perspective, maybe medium-term perspective. Answer is yes, but not necessary from a longer-term perspective.
Fair point. Let's get back to your portfolio. There are two major additions, if I may say, because of the UK India trade pact that happened about 2 months ago, and that's primarily in the textile space. Is this something that has legs over the longer run as far as markets are concerned in the textile space? Are there other winners in your portfolio lurking because of the UK India pact?
So two things. Let me before since you raise a very important point, let me answer this first in a different manner. First of all, let's say let's understand what has changed globally post COVID. People were forced to think that they have to reduce their dependency on China purely on emotional ground or the hated ground. They are not comfortable. That's the trend which started, and that's the way the China plus one thesis emerged in India also. Now let's look at with the Trump tariff drama which started in January onwards. Okay, people have understood that they have to dilute US also from their long-term perspective. It's a very important statement which I'm trying to make out here. The relevance of US will decline, the relevance of dollar as a currency, reserve currency will decline. So the trend is already gathering momentum now. And hence what every countries will try to do, they will try to get into a free trade agreement, okay, or bilateral agreements with most of the countries they are dealing instead of getting worried about US thing. And hence what India did very smartly, which was in the negotiation for last 3 years, the FTA with the Britain, and now I think Europe is also in the advanced stages. So as long we can get into these bilateral agreement or free trade agreement with most of the country in a larger interest is very good for India. And I think that is the new trend which most of the countries will follow. So this is the important background that people should understand why suddenly these bilateral talks are gathering momentum. Obviously, textile is one of the biggest beneficiary. The challenges that Bangladesh is facing and Vietnam still has a higher tariff. So India is in a very unique situation. People have to understand that when people talk about competition with Vietnam or Bangladesh or Philippines or Indonesia in some manner, what is important to understand, look at the size what we have. Okay, today globally, if somebody can really compete with China on a scale, is India. Obviously there is no comparison between India and China as of now, but there's a meaning. Similarly, there is no comparison in Bangladesh and India, there is no comparison between Vietnam and India. And hence importance of Indian companies will remain high. And also important in India is all about entrepreneurship. These entrepreneurship have also changed a lot. They have seen various cycle. They are adapting new environment, and hence I think it's a great opportunity, not only through FTA perspective alone, but the way we are able to evolve our business. I think some of these companies will go long way, and that's the reason I'm still very bullish on the small cap space. Irrespective of noise and narrative in the market, I personally say if you have any 5 year, 10 years investment horizon, the small caps will make more money than large cap.
Of course, at Quant, 26,200 crore rupees is at Quant Small Cap Fund. This is the largest fund that Mr. Tandon runs within his AMC. Let's uh, uh, let's take other parts of the market, Mr. Tandon. We've had this fabulous rally in gold, and it is now a talk of the town. It's a very popular trade कि 1 लाख रुपए तोला गोल्ड आना चाहिए और वो आ भी चुका. For a seasoned trader like you, is the rally or the allure of gold now over?
So we for last few months we have been showcasing that the probability of US gold making a medium term top is very high. And we believe in the month of April, gold has already made a medium term drop, irrespective of consensus which is getting built, which is also further endorsement that is a good medium term top. But I'm still very optimistic, and from a longer term perspective, we say one should have a sizable allocation towards precious metals, space, gold and silver both. Maybe even silver is very important because in long term, I still expect that silver has potential to outperform gold also. But somebody could have asked me from a very near term perspective, then I think gold has made a peak as one of the reason why we have exited entire gold holdings in our portfolio in our multi-asset fund. And since we can't hedge 100%, we have to maintain 10% precious metal exposure, and hence we have moved towards silver. So instead of holding gold in our portfolio, we are holding silver because we believe silver will fall less than the gold in the current environment. But if we get any reasonably sharp fall, we have talked about 8 to 12% or 9 to 12% fall can happen in gold from the peak from 3,500 levels. So I will then look for a buying opportunity, maybe closer to 3,000 mark or something psychologically around that level. So from a very medium or short term perspective, yes, it has peaked out. From a longer term perspective, I'll rebuild the exposure at appropriate time.
Okay. Did I hear you correctly that you've trimmed down gold and multi asset to the bare minimum 10% and moved that money into silver?
No, we have trimmed down gold completely. So we have to maintain 10% in precious metal space or the commodities as a basket. So instead of holding gold in our portfolio, we have minimum 10% silver now in our portfolio. Instead of gold, it is silver because we have a compulsion to maintain that much exposure as per the SIT requirement.
Okay. Now, your two biggest positions in Quant AMC are from the Reliance stable. Geo has bounced back very sharply. Reliance, being a part of energy, has also given a nice bounce from its 3.5 year low. You remain confident on both these positions because they are somewhere like 13-14% of your total AUM.
So generally, we don't comment on individual stock from purely from a compliance perspective, but I can only tell you since these are in public domain, okay, and we disclose our portfolio. We're actually first to disclose our portfolio on monthly basis. We remain very constructive in the entire space. Let's talk about since we talked about we think core this power sector space is a very core to our portfolio, and I think it's a 5-10 years opportunity we like to own some of. That's the reason we have significantly overweight in the power and energy basket. Reliance is one of the stock which we have. We have other names like Tata Power also. We have very large holding, you know. So and so is the case with many other names. So A, we are constructive. B, we are always saying that this going forward, the commercial bank will lose its relevance. The way I look at CBDC coming into picture, the blockchain technology getting it over, and we'll see a lot of changes, and the relevance of commercial bank will decline, and hence the P multiple will decline. That's the reason we are playing through NBFC route. We think neo banking or digi banking, these are the names of the virtual currency, the way you look at. I think DG Bank will be the new reality. So we are very optimistic Geo as a theme because more from a digital perspective. And then you also get indirectly holding of Reliance in up to certain extent. So we are constructive as a, see, everything in our portfolio is not for the short term and medium term. We always design our portfolio. We should have decadal opportunities also in our firm, long term exposure, medium term, short term, near term. And even if something is there on the special situation drives, we try to capitalize. So we look at a combination rather than just looking at few names. So these are the names which we are very convinced and we are holding it. You know, we our patience, our conviction was not shaken very recently when they corrected sharply. So it's give you a perspective that we have done our homework and we are convinced what we are holding.
Okay. You've also come back with a bang in two stocks from the uh, internet space. One is an insurance player which sells insurance online. The other is a company that is into transport. How is the overall internet space looking to you?
The space obviously has potential, but we have to identify stocks because the challenge in this space is only about a valuation, which are expensive and may remain expensive given the nature of the space. The concern is always about how the continuous supply also keeps on coming from various private equity sides. So those are the two challenges which we face, and hence we are very choosy, very limit few names we have taken our exposure. Otherwise, we have skipped this space because it's something which is extraordinarily expensive. And when promoter comes in, because I say private equity guys are quasi promoters only, when they come and sell, this is something which thing we don't want to give exit to the private equities guys. Okay, let market absorb it, and maybe when the stock hits neglected territory, that's the area we look for a buying opportunity.
Okay. Mr. Tandon, I will be failing in my duty if I don't quiz you on the defense space. In the first week of May, there was this flare up between India and Pakistan. Do you think a new phase for defense has started? Defense stocks, particularly PSU stocks, has started. Given this background, and will this phase be lasting longer, deeper, and bigger than the last one? What's your
See,
gut feel?
given the geopolitical noise and warlike situation in multiple parts of the world, defense has been a space which people are watching very closely, right from Ukraine war, which started and then followed by stress tension in the Middle East. What is very important for us to understand that how you look at these changes happening in the market. Uh, what is important to understand that is something has changed from a longer term perspective. Okay, and hence we would like to remain very constructive in this space, but you also have to understand the valuations are also not very cheap. A lot of things has already been priced in. So if everything has been priced in, then I would like to take a very cautious approach. And if whatever reason market corrects or these stocks correct sharply, that could be a buying opportunity rather than aggressively buying on the current level itself.
Fair point. That's what is necessary to maintain a nice temperature within your own portfolio. My final question to you, Mr. Tandon. Are you sleeping easier these days, given the fact that markets have now more or less stabilized? Any new products that you are launching, which might be for the benefit of maybe ultra HNIs or maybe small HNIs also?
So challenge we always see peacefully, very peacefully. As a behavior house, we always say that mental peace, because we are playing a mind game. We play this mind game on day-to-day basis. If we disturb our sleep or take unwarranted stress, then we will not able to do justice, because rational thinking will be missing. That's the reason we focus a lot on the analytics, because these analytics help you in a difficult time, which has been built in normal environment, can help you in abnormal times to identify these inflection points. As far new product is concerned, we recently got this approval from SIF from the SEBI. We were the first to get this approval. This is known as specialized investment funds. So it's a slightly one step ahead from the mutual fund perspective, but there's more product, more from people who are more, if I to say, financially equipped or financially more literate, because in this product we have option to hedge, not only hedge the portfolio, but we can also go up to 25% naked short. So effectively, you are actually reducing the risk of the portfolio. But since from SEBI is very clear, this product has to be differentiated from the existing mutual fund product, and hence the name of the these SI will be different, the brand will be different, or logo will be very different, the website will be different. So SEBI has asked to do certain things, which we as a house have already implemented most of the things, and we are waiting for the final approval for the set to launch this product. But we are pretty exciting about this space also, because this is again a new product. As we are evolving, these products will actually give you better diversification in your portfolio. If you have, let's say, 100% mutual fund today, and tomorrow you can take 20% SIF along with your mutual fund, then it can give you a better risk profiling also, because these products can underperform in the massive bull run, but in a risk off period they will able to compensate you what you have lost in the bull run.
Wonderful. With that description of a new product from the Quant stable, here's wishing you another 1 lakh crore rupees in the new one, Mr. Tandon. Have a nice evening,
Yeah, thanks a
and
lot
let's hope
for your best
that
wishes.
we see a record high in the markets in 2025. Thank you for your time.
Yeah, thanks a lot. See you.
That, ladies and gentlemen, was Mr. Sandeep Tandon, founder and CIO at Quant Mutual Fund. He has taken some positions on the long side as far as PSUs are concerned, considers them attractively priced given the environment that they were in 2 or 3 months ago, and of course has a strong view on how the world is moving away from the US dollar and trying to have individual pacts within nations to impact, to keep the US economy given the situation that it finds itself in. Thank you so much for your time. I hope you enjoyed the conversation as much as I did. Please continue watching Business Today Television.
Former Bangladeshi Prime Minister Sheikh Hasina tearing into beleaguered Yunus government.